The Fed held rates again. I'm going to tell you next what it means for people considering a real estate decision between now or in early 2025. So if you get some value out of this, you like what you hear, make sure to click subscribe to the channel, hit the bell for notifications, and if you want to schedule a call with our team about how we can help you, you can do that with the link in the comments. The Fed held rates again. No surprise here. This is what a lot of people expected. And the stock market rallied. Interest rates on mortgages came down a little bit. We saw quotes as low as 6 1/8 right after the meeting ended last week. So let's talk about what was said and what it means. A couple things to consider here. We're at the highest federal funds rate in 23 years, and it's been at this number since June of last year when they last hiked the rates. It's been basically 12 months at this point. And what's clear from the post-meeting comments is that the Fed is still targeting 2% inflation. Right now, the Personal Consumer Expenditures Index, the Federal Reserve's preferred method to measure inflation, is coming in around 2.5. So we got a little ways to go, but they're making progress. Their measures have worked. That's clear. And unemployment is a little less robust at 4.1% than where it was previously. And the takeaways I had from watching the press conference, hearing the comments, was that they're not willing to commit to an immediate rate cut in September. Although the CME group, they chart these things, they're predicting a rate cut in September at 95.9% likelihood, big number. And they mentioned inflation has eased, but it remains somewhat elevated. Those are the comments coming out of the meeting from Jerome Powell and company. And they said this specifically, that if that test is met, a reduction in policy rate could be on the table. And that test they're talking about is if inflation holds where it is, doesn't go up again. We don't see the economy go the other way in their measurement of inflation. That is their target here. And that's really the summary of the meeting. There wasn't a whole lot out there. The market reacted favorably. Rates came down a little bit. So what does this mean? If you're thinking about selling a home, I'm looking at inventory growing right now. It's up a little over 23% through the end of June in the greater Philadelphia area. And if rates do come down further and the Fed makes a cut and we see rates maybe get into the fives, which I don't know is realistic, but it could happen. Nobody knows anything when it comes to this stuff. That's very clear. If rates come down a little bit more, then you're going to see a lot of sellers putting their homes on the markets, because now that 3% versus like a 5 handle, even if it's very high 5, might be a little more attractive to some folks. So if I'm a seller, I'm looking at high demand locally, days on market. The median days on market is still 10 in the greater Philadelphia area through the month of June. What I'm looking at is there's a lot of demand out there. Prices are still really strong. They're up a little north of 7% on the average year to date. So I'm looking at that thinking, if rates come down, there could be more competition for me. Yeah, there might be more buyers, but there might be more competition. The demand is still there. We're at barely a 2-month supply of homes available. So if I'm a seller, I'm monitoring inventory and seeing that inventory is growing as the thing I'd be most worried about. If I'm a buyer, what I'm doing is realizing if rates come down, there's going to be more buyers. There's going to be more competition. Lower rates mean more competition for both. And we know about the lock-in effect. So this is good news for volume sales, but you got to look at your own individual situation. So if I'm someone thinking about transacting now or in 2025, the best thing you can do is find a local expert who can guide you through the market and give you some strategy. And if you want to do that, you can schedule that call right now with our team with the link in the comments.